the amount of gold that exists by the amount, or the amount of debt that exists by the amount of gold that exists, that gives you somewhere north of $40,000 an ounce. But people put value in this. So when they create that spot market, this is actually why they created the spot gold market, was to manage how you think about gold. And a rising gold price is an indication of a failing currency, but more importantly, a rising gold price is an indication of an imminent catastrophe.
Financial analyst Lynette Zang, CEO of Zang Enterprises, is warning that a global monetary reset is already unfolding. The U.S. is facing an unprecedented financial crisis, with national debt surpassing $36.5 trillion, and more than $20 trillion will mature in the next decade. This looming debt burden will force the U.S. to either repay the debt, which is highly unlikely, or roll it over into new debt at much higher interest rates. As a result, trillions more will be added to annual debt servicing costs on top of the existing trillion-dollar deficit. In response to the growing instability, central banks are accelerating their purchases of gold, and this trend is only intensifying. Not only are central banks worldwide diversifying their reserves away from U.S. treasuries, but gold is also flowing into the U.S. in unprecedented quantities. Major financial centers like Wall Street have seen an enormous increase in gold inventories, while gold vaults in London are running low. Institutions such as J.P. Morgan are actively scrambling to acquire gold. This dramatic shift signals that gold is being repositioned as a central component of the global financial system, once again proving its status as a trusted store of value during times of uncertainty. Alongside these developments, the U.S. Treasury has hinted at the possibility of a gold revaluation, which could drastically reshape the global financial landscape. Treasury Secretary Scott Bessent recently mentioned that the U.S. is exploring ways to monetize its assets shortly. While this could take various forms, many analysts interpret it as a signal of an imminent gold revaluation. Currently, the U.S. government values its gold at $42.22 per ounce, a figure disconnected from the actual market value of gold, which is nearing $3,000 per ounce. A $3,000 per ounce revaluation could improve the U.S. balance sheet by about $800 billion. However, given the enormity of the national debt, Lynette believes the revaluation may need to go much higher, perhaps as high as $10,000, $40,000, or even $50,000 per ounce to address the national debt. Such a significant adjustment would send shockwaves throughout global financial markets, undermining confidence in fiat currencies and pushing other central banks to follow suit in revaluing their gold reserves. We present the clips of Lynette's latest video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I don't know exactly who, but my bet would be that Ray Dalio is in there. He's a huge gold buyer, and not because he's worried about tariffs, but he is preparing for a global revolution. And so am I. I'm working on building a global community to make sure that in this new monetary system, we have particularly a component of convertible gold. So it's much more than taxes and tariffs. And, you know, you're doing what everybody else does, which is Wall Street trained us to look at that spot market and think, well, that's what gold is worth. No. So even above 3,000, that does not reflect its true fundamental value. And I cannot give you a whole lot of guarantees, but I can guarantee this. At some point, all assets, all instruments move to their fundamental value. So how do you know what that is? Because if you don't know what that is, then how do you know whether it's undervalued and you should buy it, fairly valued and you should hold it, or overvalued and you should liquidate it? How do you know that? The only way you really know is to determine what the true fundamental value is. The Federal Reserve very nicely tells us what the fundamental value of this stuff is, and this is true around the world, because if you look on their purchasing power chart at the Fred, F-R-E-D, everybody can access it in the search bar. Just put purchasing power of the consumer dollar, and then look on that left axis, and down at the bottom where it started out as 1,000 and moved some decimals, so there's your dollar, it's a big fat zero. And in fact, there are over 4,800 currencies that have gone to zero because governments cannot help but keep doing this, right? Central banks and governments cannot help but doing that. So how do you get that for gold? Well, actually, it's very simple. This is fiat money. This is sound money. They're both money, but they're the flip side of the coin, right? How is this money created in our system? Debt. They create debt, they create money. So if you want to know what the true fundamental value of an ounce of gold is, you simply take all of the debt that's ever been created. I do it globally because this is a global issue. And the last time I checked, it was like $313 trillion in debt that had been created. And we're not even talking about the derivative bets on top of that, but just go with that for a minute. There's an unlimited amount of debt that can be grown, but there is a finite amount of gold. So you just divide the debt by all the gold that exists in the whole world, because gold is indestructible. And the Department of the Interior of the U.S. runs a study on an annual basis of how much gold and how much silver is above ground, so has already been mined, and is in ground, so is yet to be mined. And so if you simply divide the amount of gold that exists by the amount, or the amount of debt that exists by the amount of gold that exists, that gives you somewhere north of $40,000 an ounce. But people put value in this. So when they create that spot market, this is actually why they created the spot gold market, was to manage how you think about gold. And a rising gold price is an indication of a failing currency, but more importantly, a rising gold price is an indication of an imminent catastrophe. And so when you're watching the gold prices rise and you're saying why, the answer is that there is an imminent crisis, and I can't tell you exactly the moment. But why would somebody like Ray Dalio or somebody up at that level, because those are the ones that can afford to take delivery of 500 ounces of gold at spot, right? Those people are making the rules, know the people that write the rules, can influence the people that are writing the rules, and they are getting into position to weather this storm, because we are transitioning into a whole new financial, economic, and social system. And you're watching global central banks. I mean, this is really going to be interesting because we had a rash of gold repatriation after India in 2016 took their 86% of their currency out of circulation. And then again, we saw a rash of global repatriation after 2018. So we're seeing the same thing again, a little bit differently though, because they're doing it through the COMEX. They're doing it through the digital markets in the US. And then again, gold from it's not just the Bank of England. This is having a global impact on all of the physical metals markets around the world. And I keep asking, what happens if there is a global repatriation and these governments say, Bank of England, we want our gold back, and they've shipped it off to the U.S. What do you think happens then? And to the visible price of gold, but even to the invisible price of gold, because the only tool that they have is more debt.
Lynette Zang is much more concerned about the increased demand for physical gold, which signals shifting dynamics in the global financial landscape. Recently, we've seen unprecedented movements in the gold market, such as 400 tons of physical gold, worth around $40 billion, being transferred from the London Gold Exchange, LGE, to COMEX-approved depositories in New York. This massive transfer between physical gold and the world of paper gold at COMEX underscores rising concerns within the market. Notably, COMEX traders have increasingly demanded physical delivery of their gold, a rare and significant occurrence that points to growing market anxieties. It reflects the realization that much of the gold being traded may not be backed by real, tangible gold, which is fueling uncertainty in the system. The situation is further compounded by gold movements on the Shanghai Gold Exchange, SGE, the world's largest physical gold exchange. Alongside a surge in demand for physical gold from COMEX, the SGE is seeing an extraordinary physical gold premium. This, along with nations such as China, Russia, and India, actively increasing their gold reserves. India recently repatriated 200 tons of gold from the Bank of England, suggests a significant shift in global gold markets. Unlike the West, which primarily views gold as a financial asset, Eastern countries consider it a strategic reserve integral to national power and economic stability. As this gold rush accelerates, the growing shift toward repatriating and securing gold underscores concerns about the future of global financial systems, and it may be a harbinger of something much bigger unfolding in the coming months. Let's get back to the video.
Every single central bank has a gold revaluation account. So they can do, every single central bank is already in a position to do that revaluation. I do think, I don't agree with everything, like I never agree, and I am just now getting political, to be honest with you. I do think that an audit of Fort Knox would be great. However, it needs to be deeper than that because they can have the physical bars there. What I'd really like to know is all of those leasing contracts, right? So even though those bars may or may not still be in Fort Knox, and I'm glad that that's going to get audited, absolutely, it needs to go deeper than that to know who really owns the gold in Fort Knox, and we don't know that. But I am like thrilled to death that these topics are actually coming up finally, right? Because these were not topics that anybody was talking about, though there is such a long historic precedence. And even in the US, gold has been revalued 3 times. Right? Or confiscated rather 3 times. It's constantly being reevaluated because that's what the markets are about, but it's what government needs to revalue it to get rid of all of that unpayable debt. So I really have a lot of respect for Rafi and I really think a lot of him, but I do think that there is an opportunity here and it's one that I'm working on taking advantage of because I believe that this is our best shot at actually getting sound money back in the system. And sound money is above all central banks. It's above all governments. And it protects your ability to purchase for silver the same goods and services. Silver maintains your ability to buy the same thing over time, even in this manipulated market. For spot gold, it was up over 12,000% in that same time period. So not only does gold maintain your ability to buy the same goods and services, it also puts you in a position to have that wealth transfer benefit you. Because what you're really doing with gold and silver is you are holding your purchasing power intact. Because right now what you have is you have a severely undervalued gold to a severely overvalued everything else market. So stocks, bonds, real estate, take your pick. It doesn't matter, right? Severely overvalued. That's going to flip-flop. Well, historically, because I've done there's over 4,800 times this has happened. So there's lots of data, right? So historically, 25 ounces of gold would buy you a city block, buildings and all during hyperinflationary events. Governments must go through hyperinflation in order to go into this new currency, because what I've not yet really been able to fully figure out, there's still lots of things that are being floated around, is what mechanism will they exactly use, meaning central banks, to justify creating this. We know right now that it's created from debt, and they could still do that, which means you got to get rid of all that old debt. That's what the hyperinflation is about. It's to repay that debt with dollars that have zero value. So, but if you're sitting there with gold money that holds its purchasing power, when this flip-flop occurs, guess what? You're in the right place at the right time with the right asset so that you can buy then undervalued income producing assets. And we'll have a chance to see who is going to survive, what corporations are going to survive, because corporations followed government. They're sitting on so many debts. And remember how we've talked about in the past those zombie corporations, which are corporations that have not earned enough to pay all the interest on the debt that they carry, let alone touch any of the principal. And so what the banks were doing, they're not doing it as much anymore. So we've got the rise of the zombies that we're contending with as well. But what they were doing, because the banks didn't want to show the losses on their books, is they were lending these corporations enough money to pay all of that interest, which just means they're compounding interest, which guess what? That's what all the governments are doing. They're not making enough money to pay all the interest on the debt. I mean, deficit spending, right? You're spending money you don't have. So any of that interest, think about your credit cards. If you don't pay at least all the interest, forget the principal, then what happens to that interest? It goes into the principal, and now you're paying interest on that interest. And you are compounding that interest. You're never getting out of debt, ever. So will it happen? 100%. I'll go a gazillion percent. I would bet everything and anything that it will, because it is happening and it has to happen. The system must reset. There is no purchasing power left in this. The only thing that's holding it together is the public confidence. And I think that by June of this year, the more rapid inflation will become even more apparent. And I've been tracking that confidence level, and so does the government, right? Consumer confidence, inflation expectations, all of these kinds of things. It's a con game. So they have to maintain your confidence, and they also have to keep getting new money.
With rising inflation and the weakening purchasing power of paper currencies, the global financial landscape is dramatically shifting. Historically, every major monetary reset has resulted in a significant transfer of wealth, where those in power, governments, central banks, and elite investors, position themselves to benefit from the change. Meanwhile, those who fail to prepare, particularly those holding dollar-denominated assets, often face devastating financial losses. This moment presents a rare opportunity to secure your financial future before the full impact of the reset takes effect. Gold, which has been a bedrock of financial stability for thousands of years, is now being restored to its central role in global finance. Integrating gold into your strategy is essential to safeguard your purchasing power and protect against further devaluation of currencies. That's it for today. Share your thoughts on Lynette's analysis in the comment section below. If you find this video informative, don't forget to support your finance log team and turn on notifications to stay informed about our latest videos. See you in the next video.